Great. Hello, everyone. Welcome to our sixth session of our MEFCA Future Readiness series, where we try to help our ecosystem, private capital markets in the Middle East foresee and evaluate the company decisions from a right angle, trying to bring perspective from peers in the industry. For those of you who don't know me, I am Paula Mateos, Executive Director at MEFCA. Today, we're going to talk about how venture building is shaping value creation. We have with us Mohammed Farouz, Middle East lead at SC Ventures, Tarek Osman, co-founder at APRO, and the session will be moderated by our chairperson, Stephanie Norprince, who is also a partner at Nua Capital. Guys, the stage is yours.
Perfect. Thank you, Paula, for the kind intro. So maybe we can spend a few minutes to set the stage and talk a little bit more about what we do. So I'll kick off, and maybe we can start with Muhammad. Many CVCs behave like passive, minority check writers. You guys are quite different in what you do, and you actually take a more operational supportive role, and you build companies, you help build companies. I'd like to understand a little bit more what was the impetus, how that started, and what's it been like for you personally as Muhammad playing your own role.
Thank you. Thank you very much, Stephanie and Paula. And first of all, maybe, welcoming our participants, the audience, and extremely honored to be part of this panel. Maybe to answer your question, allow me to start by giving an overview about SC Ventures. It's a journey of 8 years, being backed by Standard Charter and being the innovation and venture arm of Standard Charter Bank. Our role is to derive innovation outside of the bank. Obviously, being an international bank and being supported by an international bank with global presence, in 2018, we've realized that the innovation and the support we provide to our clients were not always meeting our client needs. And as a result, the board at that time decided to create SC Ventures. And it was independently created outside of the bank and intentionally created outside of the bank to provide the ability to create new ventures and to create innovative business solutions, sometimes also in partnership with our strategic partners. Now, fast forward, and it's been now almost 8 years. Proudly, we've created more than 33 different ventures. In the region here, it's been a journey of just over 2 years, and we have around 10 different ventures here. And the idea is not just building venture for the sake of returns, but driving impact, coming up with impactful solutions which would definitely and indeed meet our client needs, but also bringing up the bigger angle to paying back to the community, to deriving and building the nations as we are doing great stuff here in the region. So, what we do is quite impactful. What we do is quite focused. And, we'll share more example on the panel today about some of the impact-driven ventures which we've done, whether it's financial inclusion, sustainability, et cetera, et cetera.
Perfect. Thank you for that. Tarek, you and I have known one another for a while, and I've personally seen how supportive of your entrepreneurial journey Standard Chartered has been. I'd like to get a little bit to dig maybe a little bit more into your personal background, but then tie that into what you're building today. You've chosen to build it within the heart of SC Ventures. What's the one thing about that decision that nobody warned you about?
Sure. Thank you, Steph, for giving us the time, and thank you, Paula. So yes, definitely we knew each other for some time. This is my personal second venture. A bit of a background, the team behind APRO, Iftikhar, Anto, and myself, we used to be part of the bank. And while working for the bank, we realized that there is a problem statement, and solving this problem statement from within the bank was going to be an extremely complicated and expensive proposition to drive. This was a spark that took place at the time where SC Venture was also going forward with sponsoring entrepreneurship journeys. Whoever is within the organization and have identified the problem statement that can work not only for our institution but for the wider market, SC Venture had the drive and the initiative to sponsor that. Doing it from within the bank is definitely supported by the framework that SC Venture provides, has definitely added a significant edge behind what we're doing. I'll answer the question actually in a reversed way. The first comment that I used to get from many of entrepreneur colleagues is you're going to be building something for banks, which is owned by a bank, and you most probably will face resistance when trying to sell it because they will always be skepticism about how far SCB and SCB and the wider bank is involved. For this is a very valid concern and to be highlighted. Initially, we considered it and we were skeptical also how the market will take it. Having said that, when we went for our first go-to-market trial, it turned out to be one of our greatest assets. The confidence other financial institutions have in SCB as a brand and the governance that is provided behind it enabled us to access other financial institutions easier and faster rather than being an outside player, not really coming with the knowledge and the frameworks that a bank would provide to support the venture. So this was the key concern when we started. The other funny story is everyone told me never go for a live demo. Whenever you're selling, something will break up. And initially, we always fought this back and we thought that this should not be the case. Reality is on practice. No one should go for a live demo if you have not yet tested the product significantly and it's not battlefield tested. So this was learned the hard way.
I
Don't go
feel
for
like
a live demo.
there's an anecdote there.
Exactly. So this is a practical life experience. I'm just sharing a funny side of the engagement as well.
Nice. Maybe let's define some terms before we start. Particularly, I think, we'll get into the venture or I guess venture building as a whole throughout the conversation, but value creation can mean different things to different people. When you guys talk about sort of value creation and take a long-term view across your portfolio, Mohammed, what is the, or maybe perhaps the top three sort of metrics that you have in mind, and then how do you measure them?
So, first of all, allow me to share here, there's no one blanket rule which would apply across all ventures, right? Different ventures, they have different criteria. So I would start there. Secondly, and very, very different than many of the CVCs. So for us, IRR is never the priority. Of course, it's something which is very important. It's something which we would include as part of our KPIs and OKRs, but it's not ultimately the only target and goal. And as a start during the initial phase of incubation, within SC Ventures, we have a forum which we called Brain Trust. It's something which I personally find very, very interesting and very different. Brain Trust is a mixture of independent members with different background, with market experience, with academia experience, who are asked to come and challenge the venture during the initial phase. And a focus area is to challenge the OKRs and the targets and what are the short and long term outcome from whatever we are building. Now, trust me, based on experience, return on investment is not the only question raised. It's the value we are deriving, is the alignment with the national economic vision of the country. It's the impact, and this is where I've mentioned at the beginning, what impact are you deriving? Again, being backed by SC Ventures, being backed by the bank. We have a role to support certain segments who are not included. So, for example, speaking about blue collar workers, and this is a venture which we have, or speaking about SMEs or certain areas where we see as a white space. And this is where we believe that we have a responsibility to the nation to support and to look at. Now, other than such KPIs and OKRs, we also look at the for example, the you know the what's how busy is the market, what's the competition, how relevant is this for this market. So for example, setting up a venture in a country such as, for example, India might not necessarily be successful in a country like Saudi or the UAE or other markets, right? So I think relevancy to the market, the commercial term, the financial projections, and more would be something which we look at. And as I said, we have a very kind of systematic methodology where it goes through different filters, including the brain trust, including an investment committee where we have a severe or a significant kind of challenge. I'm sure Tarek would share with you, it's not done just once at the beginning, but it's a regular exercise just to make sure that our ventures are on track.
Fantastic. And sorry, I'm increasingly leaning into the screen. I have a small problem with my audio, so you'll see me getting closer and closer. But Mohammed, I think if you'll allow me, I'll jump a little bit, and I want to double down on something that you said, which is there is a notion of this kind of wider ecosystem impact. And I think perhaps maybe if you could, share your thoughts, is there a scenario where there's a bit of an interplay between optimizing for returns or exits as a venture builder in the model, right? Versus, given your role, ecosystem impact. And what does that look like in practice?
So in our views, we see a direct correlation between both, because by solving a national problem, or by solving a problem which is a white space problem, of course, commercially and from a return perspective, there is a huge opportunity, right? Maybe, to answer your question through one live example, I'll share about one of our UAE homegrown ventures, which we've built a few years back. It's called MyZoe. And the focus of MyZoe is to support and enable financial inclusive platform for blue collar workers. Now, of course, like any other country, there are segments and there are individuals who are paid very low amount of money, but they're part of our ecosystem. They're part of they're part of, and they play a role in building the nation, right? These are laborers, workers, and drivers, and other kind of jobs. Now, what we've created is a very well-governed financial inclusive platform where provides an ability to receive salaries on the platform. Of course, we look after financial crime and we look after certain governance framework. That platform provides a 24/7 remittances option for blue collar workers, and definitely provide them with a cheaper and a more inclusive fee compared to many other service providers like exchange houses and other matters. Now, first of all, it includes that particular segment, the blue collar workers. It provides an easy access of transferring money, of saving money, of doing some of the micro related transactions, which might not be necessarily provided by most of the banks. And then, of course, it provides the country like a proper digitized way of having an oversight about, rather than going through the illegal hawalas or going through the illegal ways of transferring money. Now, this is a good example where we've built it many years back. It's a licensed activity. And today, for example, the central bank, they're encouraging what we call the universal accounts, right? They're encouraging banks to include this kind of segment, and we see more and more interest. That's one example, Stephanie, and we have many other examples similarly with the SME segment, similarly with other segments. But the idea is that once you identify a white space, once you identify an alignment with the government vision, commercials and partnership and the interest from the ecosystem is definitely significant.
Wonderful. I'd like to focus a little bit on you. In your first year, what's a capability that you felt like, now looking in hindsight, you most underestimated And then expanding on that, what would you have changed, or do you think what would have changed in your journey if Standard Chartered had pushed you on it a little bit harder?
So the key difference for us was when we started Apro was the fact that before going live, there were a lot of governance frameworks that has to be adopted, given that we're a part of a bigger, wider institution. Frameworks that are acting as guardrails in terms of risk, governance, cybersecurity, tech infrastructure, data resilience, etc. Uh, this practically delayed or impacted our go live date by 2 years. It took us 2 years to fulfill all of these requirements and be ready to go to market while following these frameworks. Initially, this was obviously very annoying to the team that we felt that the product is there. We should go live and start experimenting. Looking backward at it, this was a very key feature or value added item when we're dealing with other financial institutions. So connecting the dots to my previous point, the trust that comes with the SCV as a brand is not built on just the logo. It's built on knowing what governance come behind it. This actually made our sales conversations with other financial institutions relatively easier because we're checking the boxes that they are going to look at in advance. So we were able to convince them and gain their trust to deal with a newly established startup that has been in the market for less than 12 months and trust it with a big part of their technical offering to their clients. This is a key thing that we didn't push back on or we pushed back on, but not, but we abided with and we fulfilled. Eventually, it turned out to be a really positive point, which is now we're reaping the benefits of that. We're able to acquire customers faster and easier relatively than if we wouldn't have these frameworks already implemented. Obviously, it came at the cost of time and money of the 2 years, but it's proven to be very beneficial. This applies to us because we have a big part of our proposition is a B2B SaaS. Obviously, different propositions and different ventures will have different experiences, but for us, this was a key point that previously when we looked at, we saw it as a negative point. Right now, it's actually turning out to be a great asset.
And perhaps thought it's also a question of the industry that you're operating in and the timing within our ecosystem, and also the fact that you are B2B SaaS, right? Could you speak on that a little bit?
Of course. So the timing was also a very great push for us. We got live right after COVID, and this was obviously the problem statement that we were solving was always there, but given the COVID restrictions and the lockdown, etc., there was a huge pull from the market for the digital onboarding, zero personal interface in this journey. And this was, from a timing point of view, was key factor to enable us to push the product faster. From an ecosystem point of view, we are connecting almost 16 data providers to the journey. And these 16 data providers are coming from government integrations as well as private sector, tier one, such as telecom and name screening partners. So these partners have always been there. Some of them, we worked with them to enable the functionality to be brought to the journey. But the fact that the client or the financial institution to connect all of these 16 partners, it is the biggest hassle that they have to go through, connecting the workflow, connecting the data points out of each one of these offerings. The knowledge that the team had working for SCB previously and seeing how the bank internally or any bank would be dealing with this data on a manual operational basis is what we brought to the solution to solve and untangle this complexity. The timing was great given market pull. The ecosystem was relatively developed. It's not mature enough, or there is always room for improvement. But this, the point of time that we launched that, we had enough data points and enough integrations to go live. We're always working with additional partners to bring more value to the journey and minimize any steps that comes with it.
Okay, thank you for that. And maybe we can sort of continue into what venture building, because this is a great example of what venture building looks like in practice, right? Um, Maybe moving to Mohammed a little bit. So you mentioned something earlier, which I really like. And obviously, there's value in operationalizing this into a playbook, right? It's just more streamlined. You know exactly how to execute on certain points and how challenges needs to be addressed. However, obviously, ventures can be quite unique and specific in what the requirements are, what the founders are bringing into the picture, where they need support, timing, subsector that they operate in. Um, I'd love to understand, is there something that you feel you perhaps tried to apply at Apro, um, or to Apro with Tariq from another portfolio company that didn't work? Or perhaps it's not Apro, but it's something else in your portfolio, and you could share that as a lesson.
So very good question, Stephanie. Definitely, it's again not a one blanket rule which applies for Appro. And as an example, since I spoke about my Zoe or any other venture, it's very uniquely kind of tailored for each venture, right? One immediate example or one immediate area where we differentiate, for example, my Zoe is a regulated entity by the Central Bank of the UAE, where we have different regulatory expectations and requirement versus, Appro is as a platform is not a regulated entity, right? Um, Plus the segments and the coverage and the scope and the jurisdiction, it all applies, differently. And as an example, we have a venture which is called Vault 22 today, regulated by the DFSA, located here in DIFC. Um, in fact, the idea started or the venture started in Singapore, right? And the governance requirement and what we've applied in Singapore is indeed very different than what we have here, as regulated by the DFSA. Having said that, Stephanie, something which we see as a strength, something which we differentiate ourselves from others, is the governance standard we have, right? We are backed by, of course, an international bank, where compromising the reputation of the franchise is something which is not optional, right? The appetite is zero there. That's why, I'm sure Tarek and some of the other founders, they spend a huge amount of time, and rightly so, working on the governance. And for us, that itself is the license of doing business. Today, very proudly, Appro, as an example, the connectivity they've built in the UAE, whether it's with the credit bureau, with the federal police, with the telecom service providers, and many others, would not have had happened without the governance and the comfort they have, right? I mean, some of the requirements, which unfortunately, are not taken always serious by some of the startups and some of the venture, for us, these are very critical, and it's part of building the venture, right? Because how would you connect to a very sensitive source of data without having the data protection rules and protections and controls? How can you make sure that you have the appropriate fraud controls or the cybersecurity controls, so on and so forth? So for us, governance is taken very, very serious, and it also applies to some of our digital asset businesses and ventures, right? Where the risk is extremely high, and for us, protecting our institutional clients and retail client is something which we take very seriously.
I'd like to kind of dig a little bit deeper into that, because there's a bit of what now I guess is an old adage in the venture ecosystem, where entrepreneurs are told to move fast and break things. And I think we exist in a very different pocket, where actually it's a very unique position where the regulator is often co-building with you and trying to understand how to better serve you, as an industry. But can you give a specific example of, where maybe perhaps obviously anonymized, but there was a bit of pushback on, for the sake of potential growth or, finalizing the product, there was a bit of pushback on the whole governance aspect, and that eventually, didn't turn out well at all.
So first of all, we always come up with a balanced approach, right? Because when we started in 2018, the purpose of coming up with the SE Venture initiative outside of the bank is to provide a room for founders, for entrepreneurs to innovate and to create, innovative solutions with a less restrictive environment. Of course, here I'm not saying that we would apply what we apply for the bank because it's a different regulatory aspect and different kind of standards. However, it's also balanced. It's not extremely loose. Now, back to your question, Stephanie, we always have a very healthy debate with the venture leads, right? And there is always a room for the venture leads to push back and say, while we do appreciate that from a platform perspective, we are taking governance very seriously, but there is an acceptance on the other hand for ventures to come and challenge. And we had many examples. We had many examples where people came back and said, I don't need, you know, 20 or 10 different approvals for me to, introduce a new product or for me to sign an MOU or for me to go. And in most of these cases, it's it gets assessed, and it's also worth saying that the what we call internally the support function, whether it's legal, audit, risk, and others who kind of come together and support us from a governance perspective, they themselves also have an entrepreneur kind of mindset, right? That's very important because what we aim for is always business. And by speaking about business risk and controls, they come as an essential part of doing business.
Uh, a question on this is your support function you mentioned has that sort of founder first mindset, and it's one of the hardest things to crack. We've seen that fail time and time again in large corporates. How do you manage that? Do you are these resources, do they get to spend time with founders, or do they go through different programs? How have you guys cracked it?
So talent overall for us is something which we take very seriously, and the filtering process, the interview process is quite very stringent. Um, some of our support function heads, they themselves they've been through an
Sorry to cut you
entrepreneurs.
off. Sorry to cut you off. So they're specifically hired for this. These are not internally sourced.
Of course,
Got
they're
it.
hired, and there's a mixture, very diversified. There's a mixture of internal and external. But the point which I wanted to highlight that interestingly, some of the support function heads, they themselves, they've been one day entrepreneurs. They had their own ventures, they had their own startups. So for me as Fayrouz, if I go through a process of building a venture, then I would be able as a legal head or as a risk head to be asking the right questions, to understand and feel what's wrong and what's right. And this is one of the criteria which we look at. Secondly, involvement in decision making, right? It's no longer we as a business or me as a venture lead, I would do my own things. And whenever I need a approval request, it doesn't provide the full picture. Having, an end-to-end overview, having an end-to-end kind of transparency about what's in it for the venture, what's in it for the organization, and how are we mitigating the risk. I think this all helps us to come up with a better decision. And many examples where we've seen because of the support we get from the governance colleagues, there's actually a sustainable growth, right? Because sometimes if risk is not mitigated short term, there might be a good, nice win, but longer term, it's a disaster.
Fair. Let's switch gears again. And then this sort of goes to both of you. So obviously, the region has gone through a lot of growth, but not without challenge in the past maybe year to 18 months, and obviously with the more recently current events. So maybe starting with Tariq, what is maybe the one thing in your strategy that did not change and shouldn't have?
Definitely staying close to our clients. The partner clients that we are working with are always looking for the opportunities as well. Whenever there is a challenge or a change in the macro and micro dynamics of the country, there is always an opportunity that these partners are seeking, and we are staying close, so we're able to churn product and features that would cater for these requirements sooner than later. This is a key philosophy that we've been following since SCB days. So this is the key thing that we wouldn't change. Sticking to the team and sticking to the market dynamics, work with our partners or data providers, work with our clients who are looking for our solutions. Staying connected is the key feature for, or the key item that we wouldn't change for to deal with whatever changes happening in the dynamics.
And Mohammed, what about you?
So for us, it's very important to stay committed to our partners and to the countries we work with or we work in. So, I mean, in the past few years, we went through different waves of very interesting situations, whether it's COVID, whether it's the Middle East conflict, whether it's, other kind of geopolitical or external kind of factors. So for us, the strategy never changed. The commitment and investment never changed. We've actually been very busy in the past few months, setting up new businesses. We've participated in, some of the projects. We've signed new partnerships with, with some of the sovereigns and some of the private sector. So for us, the commitment and the focus remains unchanged. Of course, we always remain flexible in terms of aligning ourselves with the internal and external changes, but overall, the commitment, the investment, and the expansion plans remain as it is.
Perfect. And I guess started what I'd like to get to, and this is perhaps it could be on your current venture, but it could be on the previous venture that you were running as well, because I'd love to kind of dig a little bit into your entrepreneurship, to your background as a founder, really. Often when the market, and you've really seen it, obviously, since COVID. So when the market gets nervous, founders often feel pressure or are pressured to pivot. So have you ever held a position, do you feel, either on Apro or in the previous venture, against pressure to change it? And if you're able to share, what was that pressure? What did you decide to do in the end? What were the learnings?
Of course. So when we first started Apro, we had a B2C proposition as the only proposition that we're offering, which is the marketplace. If you go through the website, apro.ae, you will be able to apply and get a financing facility approved for individuals. And this was the core product. We always saw that B2B proposition, SaaS solution will come later. We assumed in our business plan it will come after 3 years. Interestingly enough, it came after 11 months from going live. We got the market pull. Typically, B2B is more lucrative when you have a stable ARR and you're able to forecast your revenue and you're able to look after the business in a more structured way rather than depending on B2C customer acquisition on daily basis. So we got the feedback from internally and from SCB that if we should consider the B2C business to be sunset, given that B2B is growing and it's becoming a more lucrative business. I think the team internally, we've fully anonymously decided that B2C is going to be a great revenue contributor to the business in a couple of years once we are able to connect the two ecosystems together, the B2C and the marketplace and our solution to digital clients. We faced obviously a lot of challenges to maintain this B2C business right now, where it is contributing significantly to the revenue. Obviously, in the last few months, given the situation, we faced a blow on that. But in general, the business is growing in a healthy, profitable manner, which aligns with the overall company strategy. Any outsider who's not really involved in the business day-to-day operations wouldn't see the value of maintaining the marketplace, worrying about customer acquisition, worrying about dealing with individuals on daily basis. This becomes an extreme operational hassle. While given the fact that you have an alternative of a more stable, structured business to run. I think that we hold our foot on this proposition on the B2C and seeing the value, and it turned out to be the right choice to take once the B2B matured, and now we're able to connect both of them together. Typically, this would be a very tough discussion to handle, especially anyone would assume that SCB and wider bank is more involved in running the business. But I'm now adding to what Fairuz just mentioned a few minutes ago, which is there is an autonomy in how to run the business. It's handed over to the founders. Having said that, there are the discussions of assessing the risks, long term and short term, and deciding, making sure that this assessment is clearly and fairly and shared with everyone. But usually, the founders have the autonomy to take it for the decision making and make sure that the business is meeting the expectations. So I'm just coupling it with what Fairuz just said. Autonomy is there, and it is one of the key features why SCV has succeeded versus many other ventures or CVCs, because the founders have the say on how to make sure that the business is growing, and it worked well for us.
Yeah, and it's not always easy, right? I think it's one of those things that are very important in a founder. It's you need to know when to take feedback and know when to push back against it and remain nimble, but also not be reactive. And it's just a mix of things together that's sometimes not very easy to reconcile. And so kind of going from there, it leads me nicely into my next question. A few weeks ago, obviously, the central bank announced a unified sort of KYC platform initiative. Does this change at all anything for you?
It is a great news for us. So I mentioned earlier, we're already working with 16 partners, including government and private sector. On the KYC front, we've been working with Ministry of Interior. We've been working with UAE Pass. So there are KYC solutions that are approved and provided by the government. Adding one more with additional features and additional functionalities is always a plus for us to work with. At the end of the day, we as Apro, we don't provide the KYC. Typical to any other market, KYC usually comes from a government provider because of the database that is held by the government. So our role as Apro is to connect these data providers in a streamlined operational process that is digital, instant, zero paperwork, zero manual activities. So for us, the more partners, the better. The more features and functionalities available in the market, the better. So it is a positive news for us. We're excited to see the solution.
Perfect. Okay, so I'm going to switch gears again and maybe take it back to Fairuz a bit. What do you think a corporate venture builder can do that an independent VC really can't? And where would you need to work with, say, a Sanabil or another player in the region?
So another very good question, Stephanie, and instead of giving you theory, maybe I'll give you the examples and what we've done so far here in the region. So it all depends on the ecosystem and the partnership you have, right? The more powerful your ecosystem is and the partnerships is, the stronger is the value proposition, the bigger and the quicker is your portfolio. So far here, and it's been only just slightly few months, more than 2 years, we've been able to build the trust with more than 20 strategic partners in the UAE and the wider region, right? It's the partnership we've built with the innovation hubs. It's the partnership we've built with almost all of the international and local banks in the region and in the UAE in particular. It's the trust we've built with some of the corporates, family offices, etc., etc. As a result, we've been able to commercially expand. We've been able to introduce more than 10 different ventures. And this is something which is extremely powerful. And without the partnership and without the support we have from the ecosystem, it's extremely impossible for any player to bring such impactful or impact-driven kind of solutions to the region here. I mean, Apro is one, but we have many other Apros in the region doing great and growing. And again, very proudly, in a very short period of time, we are now more than 200 colleagues here. So creating jobs, creating engagement, and again, we always believe in partnership. So for us, that's one of the biggest advantage of being supported by what is known as a corporate VC.
And then maybe kind of going from there, what in your experience have you seen were the most difficult capabilities to sort of plug in or import into these very early stage ventures? So is it, oh, you mentioned governance earlier, but is it, beyond that, I'm sure talent is not easy. Is it access to distribution? Is it, well, building on these partnership, is it like kind of readiness to reach that sort of escape velocity from the venture builder? What in your experience has that been like?
So for us, talent and the founding team is something which we take very seriously because as SC Venture, we don't run the day-to-day operations of the business, right? That's the responsibility of the founders and the respective team members. Now, one of the key reasons, and I'm not saying this because Tarek is on the call, but we are very proud of the success and the achievement made by Apro and team. But one of the main reasons why we've made such success is not because of just the system or the brand name or any other matter. It's how passionate is the team. The team started from scratch, from zero with minimum support, and because Tarek and the wider team, they fought for what they want to do, and they've achieved what they really had in mind. Having that kind of caliber, Stephanie, is very important because you can provide capital, you can provide support, you can provide partnership, but without having the right talent, it's impossible to be successful. Governance, indeed, yes, without having the appropriate measures. And again, I would repeat the word balanced because I don't want to spend my time, looking at governance and managing risk while forgetting business. And maybe while there are many, but I will share one more. Having the right partnerships, right? So you want to make sure that you connect and work with people who are like-minded, right? Who are supportive, future-looking, rather than working with partners who might pull you back or might pause you for a while.
So they need to be able to move fast also, or at least just as, as fast as you.
100%.
To your point on capital, because of course, more capital is good, but you also have to use it or put it to good use. So have you seen a situation where more capital destroyed that sort of discipline in venture building?
So a very, very interesting question. Very, very, very valid point. So for us, the use of capital and the need of capital is something which we assess in a very systematic way because overspending and having the funds to be spent in the wrong direction also kind of result in or basically spoils the passion and the energy in the team, right? So for us, overfunding is definitely something which we carefully assess and we carefully look at. Again, it's a common practice in the market where people they raise funds for the sake of raising fund, right? I mean, no one would say no for more capital and more for more funding, but deploying that capital in the right direction is what really matters because if it's not deployed properly for the sake of growing the business and making sure that there's a return on capital, even financially speaking, it's longer term the consequences of having and more capital at a different phase of the venture is something which would definitely impact the business. So at SC Ventures, It's carefully assessed by the venture leads, by the finance team within the venture lead, and even the platform to make sure that it's neither less or more. It's always making sure that whatever is funded is planned for, and there is a way where there's a proper deployment of the funds.
Okay. So I'd like to maybe use that and go to a question that we got from one of the participants, where maybe I'll sort of summarize it. And then if anyone else has questions, now's your time to type them in. So Hussein will answer your question live. Hussein is the founder of a company called Look Insure. They're an AI insurance aggregator. And I think Hussein's question is, look, it's very difficult given the current situation for early stage startups to secure funds. And perhaps this is something that perhaps the three of us actually can answer live. What would you suggest for startups in our position, particularly those that have like weeks of runway left, because you're super early stage, and I'm assuming that you kind of put everything that you had to work. So maybe thought it as a founder, I think it'd be great to get your insight as someone who's, built ventures and seen how difficult to make it is to make every dollar count.
It's definitely a very tough and stressful situation for sure. And I think every founder have went through this at some point in time. And unfortunately, given that it's 2 to 3 weeks, it sounds very tight. I'll go back to partners and clients. This is where you will have your first source of revenue, where you'll able to actually try to sustain the business ASAP, which means theoretically you were able to turn into profitability. We might be not able to fund growth, but at least we're able to maintain the business throughout this tough weather that we're going through. Obviously easier said than done. And if it was not really in the plan and the switch is not really existing, it wouldn't be a doable thing within this 2 to 3 time frame. Fundraising process on its own is a very long process. It easily takes 3 to 6 months if you're already perfectionized how you're going to do it. So reaching out to investors right now, expecting to get results within 3 weeks is very tough. If I were in your shoe, I would definitely prioritize looking at the business revenue, partners, and try to turn it into sustainable, maintain the business for as long as I can. Then once the situation is a bit better, I'll plan for a fundraising properly.
Yeah. Yeah. Feiruz, what would you add to that?
So first of all, echoing Tariq's view, it's not an easy process. Definitely wouldn't wait until the last week for me to reach out to investors. It should be something which is planned, from day one. And in our views, and again in my personal view, is that speaking about this region, we actually see a room for investment. I mean, Middle East overall and the UAE, there's a huge room for investors to come and deploy capital and deploy funding and ventures. There are lots of amazing ideas and founders. What, in my personal view, we are lacking is to organize this process, right? We need a systematic way of organizing, the process of investment, and we need a vehicle. And I know that there are many initiatives, either private or public initiatives, where the innovation hubs, the authorities, they're trying to create a proper vehicle of assessing ventures and deploying capital in the right way and in the right time. I think lots of efforts from ourselves, including people on the call, the audience, where we need to come together and we need to organize that kind of process, because I mean, we have plenty of capital in the region. We have amazing ideas and more kind of positive environment where we can build more, we can innovate more. But what's lacking again is the overall the overall organization of the entire process.
Yeah, I think that's very fair. And just to maybe add a little bit from my side, look, like there are things that you can control, and there are things that are out, exogenous to the business, right? So, um, I'm assuming you've already kind of cut costs where you could. And echoing what Tara and Ferouz mentioned, yes, like fundraising it's a tasking process. It takes time, and typically, you need to start fundraising before you actually need to raise, which is a little bit ironic, but you do need to have built these relationships before you need the cash. However, there are certain circumstances that are exogenous to your business, and the reality is the runway might be a bit short today. I think what Tarek mentioned makes a lot of sense. If you can go to existing partners and then kind of double down on those partnerships, if you have investors in your business, look to do like a quick bridge to sort of shore you up until your next milestones. Given that you mentioned, you do have a good, like a strong track record. And then look, I'm assuming you're quite early stage, and given how early your business is, there's so many times where you're going to feel like this is the end, and we've seen it also. I mean, I've been in the space for about 20 years. Like we've seen it with businesses where, particularly very early on, I'll tell you, like it feels like, oh my God, like these are the last 2 weeks of the business. And then, you actually realize that there's certain avenues that you can explore, and you learn along, your journey how to sort of better proactively prepare to certain situations that are not under your control. So I'm hoping that you'll be able to power through, and I hope that you can kind of look around you and see if you have those partners that you can leverage for now. I'll go to Coyote's question, and then I think we will have to wrap up, which is related to the question on declining runway and Tariq's response. What's SC Ventures' view on supporting portfolio companies who can't raise further funding? Pivoting to profitable path isn't straightforward, and founders need the support.
I can take that question, Stephanie. So first of all, while venture building is our core activity or core business activity, we also have an investment arm. We do invest in strategic partners, and as I mentioned at the beginning, the investment thesis for us is not to invest in for the sake of return or for the sake of just an IRR. But for us, it's more about how strategic is the startup or a venture to the bank, to SC Venture. So for example, and to give you a quick overview, in the past few years, we've made investment in more than 20 different ventures or startups, and they are mainly ventures and tech companies who provide our ventures, who provide SC Venture or even SC Bank with technical support, with services, and with other kind of support, which we see quite very strategic and relevant for us, and as a result, we invest in them. Now, for early stages, because we kind of, as a venture builder, we have the ability to build the venture. So the best way of looking into this is to co-create, right? And, a quick example to share here in the interest of time is we are building an SME platform in the UAE. And while SC Venture is kind of taking the lead in terms of the initiative, but we are partnering with more than 5 or 6 different strategic partners to come together to co-create the venture as a JV, either from an equity perspective or from a commercial perspective, and to provide something which is quite impactful and in line with the economic vision of the country.
Perfect. I think that's super useful. And with that, I think we are right on the dot in terms of time. Thank you, everybody.
Thank you. Thank you for the insightful conversation. Just to let you know, this session has been recorded. I will send the recording to all the attendees and everyone who wanted to join and couldn't. And I will share as well your contact email in case anyone has a question. Once again, thank you so much for your time, and have a wonderful day.
Thank you. Thanks, everybody.
Thank you.
Bye-bye.
Bye.